Turning to the broader markets right now, I mentioned we're lower. Despite all the market volatility, there's reason for optimism. Here's why investors should stay the course and lean into a few contrarian indicators that are signaling a rebound, according to our next guest. Brian Belski, BMO Capital Chief Investment Strategist, joins us now. He recently cut his S&P target, now 6,100 from 6,700, so it's still optimistic, Brian. Where do you see the best ideas?
Still optimistic. What a shock, Sarah. Thank you so much for having us. Yeah, it's been humbling to be bullish. And I think a lot of the bears are quite prideful. And I would say this, that pride usually generates disgrace and humility generates wisdom. And the way I say that is because investing is a process and a discipline. And one of the things that we've incorporated, we got in the business in 1990, but we got into the sell side in 1993. And one of my very first mentors, a guy by the name of Bob Dickey, turned me on to this book called The Art of Contrary Thinking. And you want to think differently if you have the analysis to back it up. Don't think differently just to be different or to be difficult. You want to think differently if the analysis backs it up. So if you take a look at sentiment measures, such as what we think sentiment measures are, things like forward year earnings estimates, which have dropped dramatically. And oh, by the way, the out year number, which would be 2026 for the 500 companies in the S&P 500, the type of decline we've seen matches what we saw during COVID. That's number one. Number two, in terms of bearish sentiment indicators, at all-time lows again. Number three, in terms of the last 12-month PE ratio relative to the VIX, right back down to COVID-type levels. So if everyone is going one direction, Sarah, and you have the analysis to back it up, you want to be bullish. So what's the analysis to back it up? You've heard me on your show for a long time talking about America is the best country in the world. We have the best companies, in the world. We've had outperformance of Europe, which I was last week talking to clients. They're taking a big victory lap over there,
Brian,
but they're really worried. Yep.
I'm sorry to cut you off. First of all, your microphone, you might need to fix your microphone a little bit. But I get the whole sentiment and positioning, and you want to go the other way toward all the negativity. But do you have the clarity that you need to really form a fundamentally bullish case?
We do. We do, because I think what's happening with respect to companies dropping their guidance, they're beating the quarter, but they're dropping the guidance. I think that what's happened in corporate America is we have this secular side of things where clients have, companies, quite frankly, have set up to underpromise and overdeliver. And we also think, too, that what's happening in terms of the tariffs are exogenous events. All of this could go away in a week or two. And we do think that companies, by the way, you saw what Boeing came out and talked about, how their higher costs can be absorbed for the next year or so. I think you're going to start hearing more and more about that, Sarah. So I think we as an investment community, economists and strategists, have become way too bearish and have already decided we're going into a recession, that earnings are going to be dropping a lot. So I think our targets are set up to underpromise and overdeliver, and we're following the 500 companies of the S&P 500.